Hi, Marv Eisen here from Timeless Dollar. In today's video, I want to point out some information that I provide my students each day so that they can prepare their charts for the following day's trading. You're looking at a 3-minute chart of the S&P Emini, and I've drawn a rectangle on this together with a blue horizontal line. The rectangle represents numbers calculated via the Taylor book method support and resistance. Taylor's book method are a series of calculations that boil down to averages of previous days' high, low, support, resistance, and trading range. And they boil down to two important numbers, a support and a resistance. And each day I send these two numbers to my students so that they can lay out their chart like this with a rectangle for the following day. I also send them the previous day's close in case the prices the next day opens gap up or gap down. Now I chose a particular day where prices did not trade anywhere near Taylor's book method calculations, nor did they close the gap or window formed by the previous day's close and the market open. So why use these numbers? Well, first of all, wouldn't it be great if we can come up with some mystical calculation where we knew that the market was going to hit certain targets on a particular trading day? Would be, but we can't. However, the market does hit certain targets many times, and that's why these calculations are important to do every day. They won't fall into the calculated patterns each day, but when they do, they're very accurate. Now, in this particular day, prices trended up, as we can see, but they never traded anywhere near Taylor's book method support and resistance trading zone, nor did they close the gap. So let's talk about these things. First of all, when the market trades way outside of the gap, it's likely that this window is not going to close. Now, the window does close about 70% of the time, which is a pretty high percentage if you're looking for anything that's repeatable in trading. But when the prices open well above or below the previous day's close, it's likely that this window is not going to close. This is clearly the situation that occurred on this particular trading day. So knowing this information, we could throw out this previous day's close as a target. We could throw it out. So we can eliminate that. Next, we see that the prices are not anywhere near Taylor's book method. Now, there are days where Taylor's book method is accurate. There are days where it's not. But Taylor's book method also gives us another piece of information that might not be as obvious, and that is this range. And while the numbers calculated of support and resistance are not always as accurate as we'd like them to be, the range is. Typically, the market will approximate the range calculated by that day's Taylor's book method, and I'm going to prove this to you. We see here that the prices were not indicating that they're going to go to our targets, so we can throw our targets out. But wait, the previous day's close, we can throw that out. But Taylor's book method, don't be so fast to throw that out, because while the support and resistance are not going to hold, the range is most likely or very likely to be indicative of that day's trading range. And here I'm going to prove it. I'm going to copy and paste. I'm going to copy this. Whoops. And I'm going to take it to where the market opened, right about there. Bring this down. Now I transposed Taylor's book method to where these prices opened on this particular day. If the trading action begins at a certain level, is this the high of the day, is this the low of the day? If we wait for the first 15, 20 minutes, half hour, we can see that prices were trending upwards, so we can establish our Taylor's book method. We can transpose it up with the support level at the low of the day. Look what happened to the range. Ultimately, the range was just about the same as the calculation or the prediction of Taylor's book method. So even though this Taylor's book method support and resistance was not helpful, the range was. And if we exercise patience and not trade in the morning, because actually we can see that prices are not trading anywhere near our targets. So what do? Well, we wait. And in waiting, we can see what the market, a pattern that the market is giving us. So the market is giving us, first of all, if we wait through the day, we can see that, well, support is being established by successively higher lows. So we can draw a line here with 3 successive bounces off this point, and we can draw a line, and lo and behold, we can establish a support over here. So forgetting the fact that Taylor's book method gives us a support, the market is giving us a support. The market is telling us what the support is. So these numbers are telling us what is likely to happen and what's likely not to happen. It's likely not to fill Taylor's book method. It's likely not to close the window, but it is likely to trade in a range that's predetermined. So if we take the low and we see prices are rising, and then we see Taylor's book method giving us a range of, in this case, it was 37 points, we can basically determine, well, the market is most likely going to trade 37 points up from this low. And lo and behold, it did. We can use this information to give us a sense of where the market is going on a particular trading day, and therefore will give us more information on how to place a trade and where to place the trade. This is Marv Eisen from Timeless Dollar, and if you would like to get some more information on how to trade E-minis and micro E-minis more successfully and with less risk, enroll in my course at timelessdollar.com. You'll be getting this information each evening to prepare yourself for the following day. And as you go through the course and you gain experience and you use the information that I send you each evening, you'll become a better trader and trade more consistently. Thanks for watching my video. This was a little longer than I intended, but again, thanks for watching. Have a great day and trade safe.